Well, good morning, Southern Oregon, and welcome back to the Real Estate Show. So glad you could join us again today. I'm Alice Lema. I'm a broker at John L. Scott Real Estate here in beautiful Southern Oregon. And we get to interview Megan McPherson today. Megan is the owner and operator of the McPherson Agency of Farmers Insurance. And Megan comes on the show every so often to talk to us about the different aspects of insurance and home ownership and such. And today we're going to talk about commercial, renters insurance, homeowner policy, and also life insurance. It's going to be a great topic, a great hour. So please stay with us. Megan McPherson of Farmers Insurance is going to be joining us here in a minute. In the meantime, let's check in with the local statistics for housing in our three counties here in Southern Oregon. We're going to start with Jackson County. Jackson County prices this week, Jackson County prices year over year this week were up 12%. The average residential home in Jackson County was selling for $550,908. The number of solds year over year in Jackson County were down 27% this week. We only had 27 solds on SOMLS in Jackson County residential this week. The number of listings year over year in Jackson County residential were up year over year 10%. That's an ongoing trend, folks. We have 851 active listings on SOMLS in the residential market of Jackson County this week. Let's check on Josephine County next. Josephine County prices year over year this week were up 5%. The average residential home in Josephine County now costing $495,625. The number of solds year over year in Josephine County were down 27%, just like Jackson County this week. There were only 8 solds on SOMLS in Josephine County this week in the residential markets. The number of listings year over year in Josephine County were up 6%. There are now 383 active listings in Josephine County on SOMLS in the residential markets. Klamath County prices this week were down 50%. The average residential home in Klamath County this week averaging $408,370. The number of solds year over year in Klamath County were down 73%. There were only 4 solds on Klamath County's SOMLS residential markets this week. The number of listings year over year in Klamath County were up a whopping 21% this week. 352 active listings on SOMLS for Klamath County residential. So you see, folks, we continue the trend. That's why we check all 3 counties every week, and we have a definite trend going, at least in the number of listings. So thank you, folks, everybody who put your home on the market. We still have more buyers than sellers, so call your agent and discuss that. But in the meantime, let's say hi to Megan McPherson of Farmers Insurance. Well, Megan McPherson, thank you so much for coming back on the show. Great to see you.
Great to see you as well. Thanks so much for having me again.
So you're with you're at the McPherson Agency.
Correct, yes.
Mm-hmm.
Correct.
And we've had you on the show before, and you have just an amazing amount of information. So we're so excited to have you back.
Well, I appreciate the invite. It's great to be back with you.
Yeah. So have there been any changes in insurance?
Lots.
Okay.
Insurance is like real estate. I think it's constantly changing, and you pivot and adapt. And I think it's important for all of us as consumers, as business owners, as listeners, to make sure that our insurance is adapting to continually meet our needs and meet us where we are. Whether that is you've moved into a new house that you're renting, whether it's you purchased a new home, maybe you purchased a rental property, or you started that dream business. There's always something that you need to insure. And with the right insurance professional, you don't have to do all of that work by yourself, but you need someone looking out to make sure that your interests are still being properly protected as life changes and as you change.
Yeah, yeah, that is so important. So let's talk about life insurance, because that's something that most people put off, but it's something you can do at any station of your life.
Absolutely. Life insurance is one of my favorite topics. It's near and dear because we are giving our family a gift. It's the last remaining love letter you give that family member when you're no longer here. When there's still bills to pay, but they don't have you anymore, you've given them financial stability. You know, there's four main types of wealth that you'll Google, right? So there's financial wealth, social wealth, which is status, there's time wealth, which is freedom, and then there's physical wealth, which is your health. We can't control all of those, but that financial wealth, that money, that's something that we can help control, and we can start planning ahead for the future. So I look at life insurance as there's two main types. There's plenty of policy options, plenty of companies that sell it, but there's really two main types of life insurance. There's term insurance and permanent insurance. Term insurance, you're typically going to have it for a set amount of time. 5, 10, 15, 20, 30 years. You pay the same premium every month. You hope to outlive that policy, and at the end of the day, when that term comes, that policy goes away. It's just like renting a home. You pay your rent every month, but eventually you don't have that policy anymore. And then there's permanent life insurance, which you pay the premium every month. That policy never goes away. You're always protected. It's more like purchasing a home. You pay more for the policy, but you have it forever. Permanent policies also include added features that you don't get out of most term policies. You can start to build cash within your policy. There's so many ways and avenues that you can utilize a permanent policy.
Wow, so I didn't know that. What are the mechanics of that cash portion of the permanent life insurance?
Yeah, absolutely. So each policy has its own, caveats and details. So the exact specifics, you definitely want to sit down with your insurance advisor and make sure to go through them. But essentially, you pay your premiums, you have the death benefit, but you also have a living benefit. As you start to pay premiums, you start to build a cash value. You can use it while you're still alive. You can build your own cash bucket that you can borrow against tax-free.
Really?
Really. So you can utilize it however you need to, right? So you don't touch it for 10, 15 years and you've got a decent amount there. You can use it as a down payment on a house, right? A lot of people will get permanent policies on kids when they're really little. Not ever, because we think about our kids, something happening to them, our babies. But we look at the fact that we're putting in $25, $30 a month. And by the time they're 18, 20, 25, they're ready to go buy a house. They're ready for that next stage in life. They've got a little bit of money that we can help them work with.
Wow, that's
These policies
incredible.
open tons of doors. They're really user friendly, right? You can utilize them if you're new in life and just getting started from the beginning, all the way through to you're a business owner. You're maybe thinking about retirement 2, 3, 4, 5 years down the road. There are avenues to utilize permanent life insurance policies. You can make them work for you and with you.
Wow, so that sounds like it's being considered as an asset if you could borrow
Absolutely.
against it.
Absolutely. And if it is a loan from your own life insurance policy, it's tax-free when you take it. So a lot of people are now utilizing it as a portion of retirement funding. It may not be the only thing you do, but you can utilize it and you can make it work for your needs. A lot of employers, a lot of business owners are considering it as a way to take care of a key person in their company. So maybe you have that one employee that your business would not run the same if something happened to them. If you lost your key employee tomorrow, it would really affect your business and your ability to continue until you found that next person. There's just so many ways and options that you could use these policies. The one I'm a big fan of is utilizing a term and a permanent policy in conjunction with each other.
Oh, I didn't know you could do that.
Absolutely. So it gives you more life insurance to start with. So when you're young, you're starting out, you've got little kids, you've got a mortgage, you've got a larger amount of life insurance. And then as you get older, 10, 15, 20, 30 years from now, you may not need as much. So that term policy can just go away at the end of it. You've outlived it, thankfully, you're still there with your family, and now you've just got that permanent policy. So you can really customize policies directly for where you're at in your point of life and what your portfolio looks like.
Wow, that's amazing. So it sounds like with doubling up the term and the permanent, you could have a point of your life where you're in your peak earning years, and that could be extra protected.
Absolutely, absolutely.
So when you contemplate these types of products, how do you know which one you need?
It's very, very specific on where you're at in life. What, I suggest to my clients, we need to do a full analysis. Give me a call, come sit down with me. Let's talk about what your assets are. Let's talk about what your income is. Let's talk about how many income earners are in your home. Let's talk about how many children, what your plans are 5, 10 years from now. There's a lot that goes into coming up with that amount and those options. I would say definitely sit down with your trusted insurance advisor and customize that for you and your needs.
Wow, that's amazing. And we're just getting started, folks. This is Megan McPherson, excuse me, from the McPherson Agency, Farmers Insurance Company. We'll be back shortly after a quick word from our sponsors. We gratefully appreciate John L. Scott, Ashland and Medford, Rogue Valley Association of Realtors, and Guy Giles from Mutual Mortgage. Don't touch that dial. Well, hey, Southern Oregon, welcome back to the Real Estate Show. We're here with Megan McPherson of the McPherson Agency, Farmers Insurance. And we were just talking about life insurance. And during the break, Megan, you brought up the topic of commercial insurance, and that's quite an intriguing topic with lots of ins and outs.
Absolutely. I appreciate you having me back. So a lot with commercial insurance. We have a lot of business owners here in Southern Oregon. We really have an incredible amount of locally owned businesses here in the Valley, and I think that we all are super lucky to have so many amazing businesses around us. And commercial insurance is another topic that I'm super passionate about. It's the backbone of our communities. And commercial insurance is one of those things that each individual who owns a business, you're really good in your trade and in your business. And I joke that I'm really, really good at insurance because that's what I specialize in. That's my strong suit. That's what I've done for years as my career. There's a lot of other things that I'm not as great at because that's not what I do every day. And so with commercial insurance, I think it's important that as you as a business owner are pivoting to whatever you're having to do to keep your business running. I mean, I feel like as a business owner, every year there's something new that you have to adjust to and you have to pivot to, whether it's employees or location or what you offer. There's always something new to learn, and it makes us better business owners. It makes us better businesses in our communities. When it comes to the insurance side, there are also adjustments and pivoting that has to be done on your insurance policy, depending on what you're doing. You get a second location or you expand your services being offered. A lot of times there are really important adjustments that need to be made to your insurance policy to make sure that while you're doing what's best for your customers and you're growing your business is also being protected by your insurance policy. And so I think it's incredibly important that you find a trusted insurance professional who you can partner with to make sure that your commercial policies are being kept up to date, that you trust them and you enjoy them, and you can sit down and have a conversation and say, these are all the things that's changed over the last year. Do I need to make any changes? You don't have to make changes every year. You shouldn't have to think about your insurance policy on a daily basis because you're working inside your business. You're running your industry, but it's something that could really affect you. And there are a lot of things that you need to make sure you're protecting.
Well, and that idea of doing a yearly recap is really smart, whether you need it or not, getting an insurance checkup. And it's not something people think about, but especially when you have businesses, they're living entities. They're either growing, declining, or stagnating.
And you know what? Any one of those options can affect your insurance. It doesn't mean just because you're not growing that it's not important, right? A year where maybe you have had to be a little more stagnant, or maybe you're choosing to decline a little bit, you're choosing to reduce your business. It's not always a negative thing, but it can still affect you. So I think any one of those options it's a great opportunity to make sure that your policy is still working for you and protecting you and meeting your needs.
Well, and that's a really good idea to have the right amount of insurance every year. Instead of,
Absolutely.
yeah.
And I think it applies to everything. Your commercial insurance, your personal insurance. I know there's a lot of insurances out there, but they can work for you, and you're paying for them. Make sure that they're still fitting your needs, because just like life changes really, really quickly, your insurance needs can too.
And so, in the commercial arena, are there different types of commercial policies?
Absolutely, absolutely. So there's general liability, which is typically that trip and fall. I walk into your business, I trip on your front door rug. Suddenly, general liability really matters. Depending on the industry that you're in, what type of work you do, there's professional liability. I have given someone wrong advice, or a stylist in a hair salon put the wrong product on someone's hair and it's caused some real physical damages. There's professional liability. There's workers' comp insurance. You've got employees, someone gets injured on a job, you've got to have that workers' comp. There is business property coverage. Some policies are super, super inclusive. They give you a lot of coverage, and they just put everything in there that they possibly can. Other policies are very, very standalone. They give you just general liability or just professional liability. You may not have a coverage for any of your tools or any of the business property, your desks, your computers. So there are lots and lots of options out there. Dependent on the type of work you do, can make a difference on how many options you really get. There are some types of business that anybody and everybody will want to write your business. And then there's some types of businesses that you might have one or two options to choose from, and that's okay. That doesn't make it bad, but it can make a difference on what your options are. But there are lots of options out there. Commercial auto insurance, depending on the type of work that you do, maybe you can keep your personal auto policy with a business use endorsement. Maybe you need a true commercial auto policy because you're using that truck every single day. Absolutely, absolutely. There's a lot of variables out there, and I think that's just one of the many reasons to make sure that your insurance advisor really knows what you're doing, how you're using things, to make sure that you're protecting everything.
So this idea of insuring your business items, like the work phones, the computers, the things like that, is that something that would change year after year as the devices get older?
That's kind of a big variable, to be honest. Mostly what would change in that conversation is, have you added more supplies?
Oh, gotcha.
So the supplies getting older, it could, depending on the policy type that you have, there's a lot of variables there, but usually it's, have you added on a really expensive piece of equipment? Something that has really increased the amount of property coverage that you would need. Or if you're in construction, have you just purchased a really expensive tool, $10, $15, $20,000 that you need to know there's coverage specifically for that one item if something happens? That's typically where we'll see those adjustments, but it also could be you got rid of a really large tool that you had scheduled and you need to take it off that policy.
Yeah. And what kind of, I don't know how to word this, but what kind of things can you insure those items from? I'm assuming, is theft included, damage, acts of God? What kind of things can you insure it from?
Yeah, no, that's a great question. That is also, I hate to go back to it, but that's also going to be dependent on the company that you have it insured with, the type of item that it is. But typically you're looking at things like theft, fire, vandalism, Those are the big ones, dependent on the item, of course, and who the carrier is.
Mm-hmm. So the contents, that was the word I was searching for.
That
Because
works.
I know we're speaking about commercial right now, but I know during the Alameda fires, people who had their contents heavily insured did much better, especially if they were older policies. So, but in a business situation, some items can be really, really expensive and hard to replace. So,
Yep.
do the commercial policies have the equivalent of replacement value options?
That's a really great question. So depending on the carrier, yes, and that is definitely going to be a carrier-specific question, and something that you will want to know if your policy contains that. There is typically an option for replacement cost, which is exactly what you were talking about. Something happens to it, you get the amount it would cost to actually replace that item. The other option would be actual cash value. So they're going to take whatever that item is valued at today, they're going to depreciate that based upon how old it is, condition, a handful of factors. There are some items that you will be able to get at replacement cost value. Some items you may only have the choice of actual cash value, but again, it's going to be really dependent on carrier and that specific item.
Well, and
so it's a good question to ask.
What?
I'm sorry, it's a good question to ask.
Yeah, well, a lot of us don't think about this. So, and this is why we have you on the show a couple of times a year, because you don't want to wait till you're in the middle of an emergency and then find out you can't keep your business running.
Exactly. And so it's funny that you bring that up. There are some companies where you can get loss of income. So if you have an actual
Can you
building,
really?
Absolutely. So
Wow.
depending on the type of business that you have, Farmers has a product where we can offer loss of income. So if something happens to the building that you do work out of and that building is unusable for a certain amount of time, depending on your carrier and your policy, your own policy could actually pay you your lost income until you're in a position and have the ability to get back to work. So commercial insurance is one of those policies that it can work for you. It can actually protect and pay you personally, depending on the type of loss.
Yeah. Well, loss of income insurance, that's just mind-boggling and amazing. Because in a true catastrophe, sometimes you just need to hit the ground running, and that insurance money would certainly help.
Absolutely.
And I'm assuming the policies have deductibles and things like that, and they're all kind of specific to your situation.
Yep. It's going to be very, very specific on your type of work, your situation, your occupation. It won't apply to everyone, but it's certainly worth looking at your policy and asking some questions to find out if it's an option you have and if you've got it.
Well, it's just great news to hear that it exists. So we're going to have to take a quick break. We're talking to Megan McPherson of Farmers Insurance. We'll be right back after a quick word from our. Well, welcome back, everybody, to the Real Estate Show. I'm Alice Lema. I'm a broker here at John L. Scott Real Estate in beautiful Southern Oregon. Just a quick reminder, this episode with Megan McPherson is going to be played again tomorrow morning on Sunday at 8 a.m. So you can hear all of Megan's good advice from the McPherson agency at Farmers Insurance. Welcome back, Megan.
Thanks for having me back. I appreciate it.
So in the last segment, we were talking a lot about commercial. And during the break, I asked you a couple of wishful thinking questions, like, can you insure from economic downturn? And you said,
not often. We wish.
We wish. But along those lines, there's a lot of small businesses in Southern Oregon, and one of the more popular ones is being a landlord and having apartment buildings and things like that.
Absolutely. Being a landlord is definitely comes with its own special set of needs, right? You've got responsibilities that a standalone homeowner just doesn't have. You're responsible for a certain level of upkeep. You have different things that might apply to you when it comes to laws and rules and regulations. Insurance is the same way. It's handled differently. If you are not living in the home that you own, and you do have it rented out, you need to make sure that you have a landlord policy. There are certain coverages that are absolutely necessary. And then it really depends on, do you have a standalone landlord? You know, is it a standalone home? Do you have a duplex, an apartment complex? They come with their own special needs. You know, a lot of apartment complexes and duplexes and even some subdivisions, you have homeowners associations or condominium associations. They may have their own requirements. You know, there may be things that you need to worry about. Loss assessments becomes a big one. Insurance policies can give you some coverage for loss assessments. Sometimes you can even set what that limit is. So definitely dependent on the type of properties that you own and what you do with them can really dictate the need of what type of insurance that you have.
So that's interesting that a homeowners association can add extra insurance requirements above the standard.
So typically, and the homeowners association was probably misphrased just a teeny bit. Usually it's the condos, the duplexes, but really what you're looking at from the property owner standpoint is, what are you responsible for? And is your policy written in a way that it helps cover the interest of what you're responsible for? Are you responsible for the roof, or are you responsible for studs in only? Those requirements, those details usually are going to be written. You're going to find those in your rules and regs, your bylaws, you know, that pamphlet that you can find online, whoever your association is usually, that's usually going to be the teller of what type of policy you really need. Do I need walls in, I'm only responsible for studs in, or am I responsible for the roof? And those are pertinent details.
So where does the line get drawn between what you need as a landlord, homeowner of a rental, and the tenant? Like where's the insurance line drawn?
That's a great question. So from you, we're gonna talk first from you as the landlord, the owner of that property. You have to worry about the structure itself. You have to worry about the premises liability. If something happens inside your owned unit and or in the property of whatever that home is on, and your tenant gets injured, you need to worry about your liability, right? Those are going to be the two main concerns. There's more than that matters, but the majority of your concern there is going to be the liability if someone were to get injured or harmed, and then your building itself. If something were to happen to your investment, can you have that house or that condo rebuilt so that you can continue getting rental income? From the renter's standpoint, there are lots of coverages for you to be worried about, because your landlord is not responsible for your possessions. They are not responsible for a single item of yours within that home. So as a landlord, you can choose to have coverage for your items that you supply within the house. So if you supply refrigerators, washers and dryers, dishwasher, you can, as a landlord, have coverage for those items. But as the renter, anything that is your personal possession does not get covered under your landlord's policy. So you need to worry about coverage for your stuff. If you were to take that house that you're renting and you were to tip it upside down and shake it out, and anything that falls out of the ground is yours, you need to worry about that. That you need coverage for. As a renter, you also need coverage for your personal liability. You also have concern if one of your friends comes over and trips over a rug and gets injured.
Sorry, I just want to back up a little bit. So if somebody gets hurt on the property, but they get hurt on, like you just said, Megan, your rug, and it's your rug, then does the renter's insurance cover that?
It will be very dependent on whose item it was and what caused it. But if I'm visiting your house and you're renting your house and I trip and fall on your rug, it's most likely going to be you. If I'm renting a home from you and there's something that wasn't taken care of as part of the
like
house,
the carpet wasn't stretched.
Yeah, that could be more of a concern for the landlord, the person who owns the property.
Okay, interesting line.
Yeah, and there's definitely needs for both parties to have it, and it is beneficial for almost everyone to have some sort of liability policy, whether you're the owner or whether you're the tenant.
Mm-hmm. And speaking of extra liability, can you talk to us a little bit about the umbrella policies? A lot of people don't know what that is.
Absolutely.
And it's a funny
umbrellas,
name.
umbrellas are amazing. It's the most perfect name ever. Think of an umbrella as literally that policy that goes over the top of everything else. So your umbrella policy would come in to cover over your auto insurance, over your home and or renter's insurance, whichever one you may do. We won't get too far into the weeds, but if you have a commercial business or you have commercial rentals, sometimes you might even have a commercial umbrella policy that covers your commercial umbrella, covers your commercial interests. Maybe it's a different business entity name. And then your personal umbrella will come in to cover your personal interests. And all an umbrella is an additional liability policy. You can get it in $1 million increments. Many companies will go up to 5, 10 million, depending on the scenarios, but you can get it in $1 million increments. And its sole purpose is to fill any gaps that might come in after you've had an accident. So if you've had an auto insurance accident and whatever your liability limits are have been surpassed, your policy has paid out $500,000 to somebody that you hit and they got hurt. You've hit that limit, but they still have injuries beyond $500,000. That's where your umbrella comes in, and it makes up that difference. Same thing happens at your home. Someone's at your house, something tragic happens and they get really, really injured. Your home insurance policy pays out its max limit, and then if there's still bills above that you as the owner are held responsible for, now you've got that umbrella to come in and fill that gap up to that additional 1 million, 2 million, whatever that amount is. I strongly believe in today's day and age that anyone who owns their own home absolutely should have an umbrella insurance policy.
So homeowners that have swimming pools, are umbrella policies recommended?
They're a great idea.
Excuse me?
They're a great idea. Heavily recommended.
Heavily recommended. Yeah.
Heavily. There's a lot of people who would benefit from an umbrella, and you don't have to be a homeowner to need an umbrella.
Really?
If you've got, absolutely. If you've got assets that you could lose and or the ability to gain money. So in the state of Oregon, you have to be left with a home, but not necessarily the home that you live in, and wages can be garnished. So just because you don't have $1 million in the bank today doesn't mean you still don't potentially have something to lose.
Good to know. And so the umbrella policy, so let's say that you own a construction company, but you're a renter, you don't own a home, you're working on your business. Would you have an umbrella policy recommended in that situation?
Absolutely. You've got the potential to earn a substantial amount of income. You have got assets at that point. I absolutely would recommend that you carry an umbrella in that situation.
And what about the employees that you have working for you? What insurance? I mean, we're kind of bouncing around between umbrella and commercial, and we only have a few seconds left. Is there anything that can help you make payroll if something happens?
That's something that you would want to look at and discuss directly with your insurance carrier. That's going to get us a little too far in the weeds. I don't think we have enough time left. I don't think we have enough time left for that one.
Yeah, well, and as a business owner, I'm just sitting here thinking, well, what would happen if?
There's a lot of what ifs. We're going to leave that one.
Yeah, okay. Well, and I didn't mean to get too far into the weeds, as you say.
That's a good question.
Yeah, we're talking to Megan McPherson from the McPherson Agency, Farmers Insurance. We're going to be right back after a quick word from our sponsor. Well, hey, everybody, welcome back to the Real Estate Show. We've got Megan McPherson here from the McPherson Agency, Farmers Insurance. And what a great interview, Megan. Thank you so much. I know we only have one segment left, but I feel like we could do a whole nother show.
I'm pretty sure we could. I appreciate your time, and thanks for letting me be on the show with you. I enjoy it.
So during the break, we were talking about residential, new construction, vacation rentals, and you had something to mention about vacation rentals?
Absolutely. So vacation rentals are fun. We all want to go and travel. It's even more fun if you can stay in an Airbnb. You go somewhere, you stay in a house that you feel really comfortable in. It's not just a motel. Motels can be amazing and great, but having a house to go stay in can really make a vacation special, especially if you're bringing kids, you're bringing family. You feel like you can spread out. You feel like you can get at home somewhere. And as a homeowner who might have another place that they could go stay for a time, it can be really fun to have an Airbnb, to be able to interact with people who are traveling through the area and who appreciate what your home, your cottage has to offer. There's a lot of fun behind that. It's important that if you are considering using your home or your cottage or your short-term rental as an Airbnb, that you make sure the insurer that you have will allow for that and or has an endorsement you can add on so that you have coverage for people staying in and out of your house, that if there was a claim, your home would be covered and your assets would be protected. If there was a liability claim, someone's child got injured while they were staying at your house for a couple of nights under Airbnb, that your policy could pay out.
So does the Airbnb platform have its own insurance, or do you have to have additional?
So you're typically going to need additional. There are several big companies who will Airbnb for you. VRBO, a couple of other options like that. They will have specific types of insurance. You'll want to read the contracts. It's obviously different in each state, in each area. So there are portions that they may cover, but from the insurance company standpoint for your structure itself, there's typically not going to be any coverage for that. You have to look to your main insurance policy for the home itself. Even the liability portion, there may be some companies out there who will give a little bit of liability protection while you have someone renting out your home, but you'll definitely want to double check that. Typically, you need to make sure that your underlying home or landlord policy gives that endorsement itself so that you don't have to kind of hope on a wing and a prayer that the company you're going to provide all of that coverage. They just typically do not. There may be some rare occasions, but they typically won't.
So is that a landlord policy or hybrid? Is that a homeowner policy? What do you do with that?
So it actually depends. There are a couple of options. If you live in your home and you just want to be able to have a room, or maybe you have the mother-in-law suite behind you and you've decided that you want to open it up. So the last couple of years have gotten really big here for traveling nurses. So I've got a handful of clients who have decided to rent out, their mother-in-law suite or their cottage to traveling nurses. So I have a product that I can write your home as a homeowner so that you're given all of the coverages that you need and you're still living there, you're still sleeping in your bed, but you're also getting protection for the Airbnb portion of it. Then there are some where you purchase that home directly to use it as a rental income. It's just forever going to be a landlord policy that has that Airbnb option. So there's typically, and it's always dependent on location and type of construction, and it's not one size fits all, but generally there are options whether you're living there or whether you just choose to rent it out the entire time.
So some people have, it's called short-term rental. Airbnb is called short-term rental. So some people have short-term rentals in a part of the county or municipality where it's not allowed. So I've always wondered, Megan, since you're here, what happens if you have an accident in your Airbnb and you make a claim on the insurance, but it turns out that you're not properly zoned for that? Like, what if you're not supposed to be doing that? Like Ashland has only specific streets where you're allowed to have short-term rentals. And so
I'm learning something too. I had no idea. I'm learning something
they have
too.
specific streets and it's not very many. And the properties are more expensive. So, but a lot of people will, have a short-term rental not in the zone. So what happens when you put a claim in?
That's a great question. Here's what I will say. Insurance is very contractual. So when you take out an insurance policy, you are making a contract with the insurer. You have agreed to XYZ. These are the risks that you as the homeowner are telling me about. You have said this exists and this doesn't exist. So contractually, if you have been factual with the insurance company, that's what they are going to look at. Caveat is, if there was something illegal done at the time, you may have some issues for concern. Being that the insurance is contractual, I'm always going to say refer back to what your policy contract says. Some companies may word it differently than others. I've got experience working with many different companies here in Southern Oregon, specifically for different insurance carriers. I'll always refer you back to your contract, because my opinion doesn't really matter much when it comes down to you just had a really, really bad loss at your house. So refer back to your contract. When in doubt, don't do sketchy things if it's not zoned properly.
Yeah. And none of us do, and we don't recommend that to our clients, but we do stumble upon it sometimes.
Absolutely.
And I just always wondered if you have a short-term rental or any kind of a rental and you're not supposed to, according to the zoning, does the insurance claim get denied? It could jeopardize it.
Yeah, it's really going to go back to what that contract says. Some contracts are very, very specific, and others may not be as specific. So I would definitely refer back to that contract. But it's a great question, and it could definitely turn into a sticky scenario for lots of reasons, even outside of the insurance portion.
Right. You think you're going to save a few bucks by not telling anybody anything, and then oops. Could be quite messy.
And so it's funny that you bring that up. That's one of my very first talking points when I get the opportunity to have someone call me and say, I'm looking at purchasing a home, or I'm in the process of purchasing a home. Absolutely, my first thing is congratulations. That's always exciting. Now tell me some more about it. Are you going to be living in it as your primary home? Or are you going to use it as a rental property? Are you going to use it as an Airbnb? Because when you call me to tell me you're buying that home, I need to know what the use of that home is. I need to know, are you going to be farming on it? Or is this just a little, single family in a subdivision? It makes a difference on the type of insurance that you need. And it makes a difference on how well you are being protected. Insurance is very contractual. Give us that information up front. It helps no matter who you're talking with to make sure that you're doing your due diligence to help your agent give you the best protection for what you need.
So that brings up an interesting scenario, and we're almost out of time, but we'll have to have you back on. You buy a house as your primary, you live in it for a while, and then you want to move out and buy something bigger. How does that insurance situation change? Because now you have two houses, but you bought one as a primary. Well, yeah, so.
No, it's a great question. It depends on what you're doing with the original house that you bought. So if there's states or towns away and it's far enough, and maybe you're going to be going between the two all year long, maybe one is your primary and one is your secondary. If you live here in Southern Oregon.
You would categorize like that.
Absolutely, yeah. If you have a home here, but you go purchase one on the coast and that's going to be your secondary, that's when you go over for vacation, maybe it becomes that secondary. If you just purchased the new home of your dreams and you've put the first one up for sale and it's sitting vacant, then that needs to have a vacant policy on it. Even if you only need it for a couple of months, you need to protect that house being vacant now that it is.
A vacant policy, yep.
Absolutely. They're really, really important when houses are up for sale and no one is living in them. Most standard companies have a 60-day clause. So if a home has been vacant longer than 60 days, you lose vandalism and malicious mischief. There's some other coverages.
I bet a lot of people don't know that.
Vacant policies are really important. If you have questions, you know where to find me.
Yeah. Well, and speaking of which, Megan, we're almost out of time. Can we have your phone number real quick?
Absolutely. It's 541-776-0673.
And you have an email?
I do. It is M McPherson, so MMCPHERSON, the number 1 at farmersagent.com. And we just moved our office last year, so we are now kind of behind the airport on Bullock Road. So our office address is 2821 Bullock Road in Medford.
Well, that's so exciting. And thank you again for all the great information.
Thank you for having me on. It was great talking with you.
Have a beautiful Southern Oregon weekend, everybody. We'll see you next week. Bye now.
Bye-bye.